All right, guys, I am back again with another video, and this video is your weekly Decrypting the Cryptos with Ichimoku report. So we're giving this to you today. Basically, we were looking at the top 10 traded cryptos in the past 24 hours. And guys, we got some nice setups, some nice things. So want to get to it, and hopefully it helps you out. So let's get started. All right, guys, before I get started, please do take a look at my disclosure statement. Please understand and know that I am not an investment advisor. I am just an educational trader. All right, guys, please do look at my disclosure statement and understand that I am not an investment advisor. I am just an educator. The things I do and show you here today are for educational purposes only. So if you decide to take upon yourself to take up on anything that I am showing or doing today, please do consult with your own financial advisor so that they can help you to consider all relevant risk factors when trading the crypto markets. All right, guys, so you know that every week when we do this session, I love to give you a word from the Bible, a word of encouragement. And today's word comes from Luke 6, chapter 6, verse 37 and 38, which say, "Do not judge, and you will not be judged. Do not condemn, and you will not be condemned. Forgive, and you will be forgiven. Give, and it will be given to you. A good measure, pressed down, shaken together, and running over, will be poured into your lap. For with the measure you use, it will be measured to you." So, guys, what that is telling us is that a forgiving spirit demonstrates that a person has received God's forgiveness. Jesus described this using the picture of measuring grain in a basket. If we are critical rather than compassionate, we will also receive criticism. If we treat others generously, graciously, and compassionately, however, this treatment will come back to us in full measure. We are to love each other and not judge each other. God bless. All right, guys, so we're going to get to this thing really quickly. Don't want to waste your time because really a lot of these look pretty much the same. You know, they follow on the mother, and BTC is the main asset here. And that's what most of these assets are going to look like right now. We have a few that are a little bit different, but everything I say is going to be based off of seeing almost the same thing that you see with BTC USD. So right now we're looking at the daily time frame. I'm going to switch this to the weekly time frame real quick. Just get a big feel for what's going on with the overall picture. And you could see really what's happening here. So the market's come down to this level, this main level here, the past 2 weeks. And we already talked about this level being vital in previous sessions. This level is vital, and you can see what's happening with the market. But we have a little bounce off of this level, and this is a little bit of, I wouldn't say hidden bullish divergence. And the reason being is because I don't think the trend was bullish, but I could be wrong. We did make a higher high and a higher low. So therefore, yes, we could consider it trending to the upside. And this would be a hidden bullish divergence where we would see this market push higher. Now, based off of Ichimoku and everything that we see, yes, we're getting this correction. We got a TK crossover that's bearish. We got a future that's dark. So nothing but downside for this asset is what this is showing on Ichimoku, right? But there's an issue that I see, and I don't see this as basically all downside here. I see some things that could help us. Now, we do have a crossover here that's bearish. This future is dark, so that's bearish. Chiku span is inside of price right now. It's not really under price. It's like kind of inside of the price realm right here. So therefore, that's going to make this like a flat market, right, on the weekly time frame. Now, the main thing is that the market bounced off of this support and resistance level, then pushed up back to this level here. This is a main level that I always look at trading. This is a fractal level. We kind of already figured the market may push up to this level. This is where it pushed up to, and then we're looking for it to drop back to the downside. Now, if it violates this level, and just because we have this crossover and everything, the main trend was bullish. This all happened here based off of the correction of the market, right? So now this could be a change back to the upside where we see the market push to the upside. I'm not seeing real strong, like on the weekly chart, on this chart, I'm not seeing strong institutional traders with this move to the upside overall. So on the weekly time frame, it doesn't look like it's a longer term move to the upside. And also, if we do violate this level, we could push up to some other good levels, and this would be a good level here. Also, this is another fractal level we could see the market push up to. We did find support at the cloud, just broke under a slight bit, but came back to this base right here. This base is really strong, and then the market pushed off. So we want to see what we're doing on the daily time frame now, just to catch. Maybe we could catch something. Let's go back to the daily. So we're on the daily. So what we're looking at on the daily, everything is bearish on the daily except our crossover here is bullish. All right. So we got a bullish crossover. But the thing about this market right now, so what makes it, you could see like span A pushing up, span B flat, separating the gap is getting tighter. So we could be seeing something crossover. Maybe we could see price cross through this, but this was that main level on the weekly chart where I said the market to push up to, and then we find the market support resistance here. So we could see this market push back down. Doesn't mean that it has to come back down into this area, but I think we may find resistance here, and then we see the market drop a little bit, and then we push back up for this cloud. So we have like a small N wave already, which is a reversal, which would be this move here. All right, but if you look at the overall picture and the bigger picture, what you're seeing is basically this move here. All right, and we're saying if it comes and breaks this level, then we're continuing with that N wave to the downside. We're going to see way more decline, but I don't know, okay? Because the thing is, if we hold here and we drop, in order for this to continue to the downside in this N wave, we have to break structure. So we'd have to really break this area here. All right, so we could push back down here, right? Here's what you could possibly see. We could see market hold here, get a push back, and then the market push higher because you got support from your Kijins in here. You still have structure here that you need to see the market violate, and then this main area of structure where we would have to violate in order for this market to continue to the downside. All right. So we found a major monthly support and resistance level. So a major monthly support level that is major for us, and the market bounced on that level and it pushed up higher. Everyone's probably thinking, yeah, we're going to see this market go back up to the upside. We're good to go. This is pulling off now. Here we go. I wouldn't say that so quick, all right, because we haven't even broken main structure to continue to the upside. And really, if you're basing this off of Ichimoku, you want to get through that cloud. So you need to get through that cloud. And for me, I don't trade this break here because you're going to get an opportunity to trade it again. So what you would probably look for is, and I'm not saying you definitely will get a chance. If it does break, I look for it to push back to that level, and then we trade it to the upside because this would now be support. At this point, if I trade now, I'm trading resistance to the upside, and that's incorrect. I should be trading resistance to the downside. So therefore, I wait for this to turn in from resistance, all right, to then support at this level, and then I'll trade it long. As long as the market's below this level, it's resistance, and I'm going to trade it to the downside. If I don't feel comfortable with the trade, I'll just wait. All right. But another thing you could look at is since we have a little bit of structure, and we're also talking about fractal levels where the market pulls back to. So if this market drops, there's a good level that can hold us, that can keep us from dropping any farther. And I'll show you. First of all, you could see that angulation I was talking about previously. Here's our crossover. But here's the good level. This is a fractal level. So we'd be looking for the market to come down to that level. So I'm going to draw that on here with this. Now this is a minor fractal to me, but maybe not. A fractal is a fractal, so I trade it as is. So what we would be thinking now, based off of what we see with the fractal and the resistance here, maybe the resistance holds now, and then the market pushes down to this fractal level. All right, and then this is where I would buy this market. All right, and then see it push to the upside. But looking at Ichimoku, just based off of Ichimoku and not looking, see, I get so caught up into telling you guys about structure that sometimes structure is not in alignment with Ichimoku. Like structure will be telling me that the market's going to make a move to the upside. Not going to, but you could see what's happening on the chart. And currently it would be like maybe it's a bullish move at the time, but Ichimoku's still bearish. Don't forget, guys, Ichimoku's slower than the market. There's nothing that's going to tell you exactly what the market's going to do. You have to look at the structure of the market. The market's going to do what it wants, anytime it wants, whenever it wants, wherever it wants, however it wants. You can't determine that. But you can do two things. You can prepare yourself on both sides, up and down. So you prepare yourself for if it goes long, you prepare yourself for if it drops to the downside. So our synopsis is if it holds here and drops, we're looking for it to come to this point where we would buy it. We already got the weak bullish crossover. We're getting angulation on span A to the upside. Now, in order for Ichimoku rules, you would really wait for the market to close above the cloud, because anything below the cloud, I like to trade short. Okay, so what I'm also going to tell you about this, see this Kijinsen here? Get a big candle like that, and then we break back through the Kijinsen. Then you can know that the market's heading back down to this level right here. All right, if we find support at this area, I think we may see the market push back higher, or we could range or whatever here. But also you want to see, and another thing that's really important for the change of structure is to see your Chiku span, all right here, where it is right now, break through Kijinsen. So until it does that, then we're kind of like bearish. We could probably range, all right, in this area. But I can't give you anything definite the way this market is like this. And the only time I would really, like for me, I get definite when the market is, let me show you a couple things. Like I can really say, okay, this is when I'm going to take a trade. So this is a bearish market right now. All right, so what I would be looking for is, first of all, I look for the market to bounce on these fractals. So I'm going to mark every fractal. And this is how I look at the market. So I'll mark this fractal because the market's bearish. It doesn't come back to that fractal, okay? We had a fractal here, but we were still inside the cloud. So we broke the cloud, so we're pretty sure we're bearish at this point. But then we kind of flattened out here. So you would mark this low. This would be a level, and you look for the market to push back. We didn't get that pushback. But now, where we are now, the same exact things that we were looking for here appears here. So this is where, like, when I'm trading the market, just really would short this at this point, because we're still in alignment with everything that Ichimoku is telling you. So I probably confuse you a lot by telling you this kind of stuff. And it's hard for me because I look at the structure of the market and I don't pay strictly attention to what Ichimoku is showing me. And if I don't feel comfortable, like, so on this, I wouldn't risk a lot. So I want to see what this candle does when it closes, right? So when this candle closes, if we still have this type indecision, if we still feel the market's bearish based off of what Ichimoku is showing us, then all we need to do is really just put our entry at this point, a sell, and then put a stop loss up here. All right. And then if the market triggers us, we look to go to this level with profit. And then we try to see if the market can violate that level. All right. If we can violate this level, then we suspect the market could push to this level. So we would look for entry here, profit here. And then what I do, I don't take all my profit, and sometimes I don't take any of my profit if the market's showing me strength getting through a level. So if it shows strength getting through this level, then what we'll look for is to go down to this level. All right. And then the next thing that we want to also pay attention to is this. So we talked about possible short, but the possible long, I already told you, if it breaks and comes back to this level. All right, because this will be the support level from the fractal. That's when you would take this long. All right, now you would be below the cloud, but structure wise, you already have a crossover that's bullish. Now, if your crossover is bearish and you just break structure, I wouldn't jump on the boat right away. I want to make sure, like if I got a bearish crossover here, like this crossover is bearish, but I start breaking structure, then I would just wait and see if the market comes back to test any of those structure levels before I get my crossover. Once I get my crossover, then I can start to realize that maybe we're starting to see the change, because what the signs are: crossover is bullish, just crossed over, got angulation here, flat here, and Chiku span right now is inside of price a little bit. Actually, Chiku span's below price, so we're still bearish on that aspect. All right, so the main thing again, guys, prepare yourself for whatever the market may do. Don't guess what the market's gonna do. Prepare yourself for what it may do. So when you analyze the market, you analyze if it goes higher, and you analyze if it goes lower. What are you gonna do if it goes higher? Are you gonna jump in right here if it goes higher? You're gonna take the break of this level? Or are you gonna wait for it to come back and test this level? All right, so you have to determine those things, and that's what I'm trying to do right now, and that's what I determined to wait for it to come back, because I don't know if this level is going to hold or if it's going to bounce or whatever. So then my next synopsis again would be for me to take a trade below this level and then trade to this level, and then if I can violate that level, then I go down to this level. If I can't violate this level, then we suspect the market to push up higher. Maybe it ranges or it pushes up higher. But that's the way I look at the market. I want to prepare myself for both aspects of the market. All right. So if you're playing defense, you're a football team, and you always say, oh, this team's going to run the ball, and you're not prepared for them to pass, then you're probably going to get in trouble. So you have to be prepared for a pass or a run. And in this case, we have to be prepared for a long or a short. All right. So sometimes you definitely can feel a good short move, but we're coming off of a level like this, and we had divergence, and we're getting a crossover here. Those are signs that I usually see when the market's trying to change direction. And it doesn't mean it's changing direction for a long time. It could be just changing direction for a little bit and then coming back. So it could be just a correction or so forth. All right. But we don't know if a correction is going to be a trend until we start breaking structure. All right, so this is the main one that we just looked at, BTC USD, and let's go to ETH USD. Pretty much looks the same, right? Some of these things, and whatever I told you just now is pretty much the same thing, because we could go to the weekly time frame. So whatever I told you just now with BTC USD, pretty much is going to apply to ETH USD. Okay. Again, this level, we had a level here. I didn't mark that because I didn't see any other major support with that level. So we're only looking at this as the cloud support, but not any other structure in this area. The only other structure, like the main support and resistance on this chart, would be right here, because you have resistance here, a little bit of resistance there, then we broke through, then it was support, 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 support. So then we could see the market push down to this level, but we're still bullish on this chart. All right, but we're starting to see a change. How are we starting to see a change? A couple of things you need to always look at when you're looking at Ichimoku anyway. So not just Ichimoku, sorry. When you're looking at the markets, period. Let's go back over here. So I'm using the money flow index, all right? And it's set to 14. That's the default setting. So I always look at divergence, and then sometimes that lets me even know, like if I start getting those crossovers and so forth. So if I see bearish divergence and then I get a crossover, and then definitely when the market closes through the cloud, I'm for sure that what we had was going on. And I hate to tell you guys for sure, but that's, I just feel more confident. All right, so see that going higher? And basically from this point, let's back it up. Let's back this up. Just looking at this level right here, all right? And look what the market was doing. So when you see this market push this far away, you got a little bit of distance on Tinkinson and Kijinson, and then you should start wondering what's happening with the market. Finally, the market drops really hard, all right, after this divergence there. You can see how hard it dropped down to this level here. Then at this level, there was no divergence. Then the market just pushed back up. All right, and so then when we got to this point, no divergence here. But when we look at these 2 points, there's a total divergence and the market dropped. And we look at it dropping to some of our levels. All right, so what I trade is levels. I always have a level that I'm going to look at. I don't take a trade unless the market's at a level. All right, so I'm always trading levels. I don't just get in the market because. All right, I'm always getting in at a level that's been prepared ahead of time. Just like these levels are prepared ahead of time. When the market gets there, I decide if I'm going to take that trade or not. All right, but usually if the market gets to that point, then I'm going to take that trade because I did all my analysis and that's what I believe is going to happen. All right, let's push this back to ETC USD. So again, looking at this on the weekly time frame here, we're going to go to the daily, figure it all out. It looks just like BTC USD, so everything I'm telling you pretty much going to be pretty much the same. Going to be pretty much the same. We don't even have the crossover yet, so we could see this again drop. All right, this is a major support and resistance level. This is a major trade for me. Again, I trade the fractal levels, but on this chart, I don't see any levels that were really bounced on. I mean, this was a fractal, but we had a big candle there, so I didn't pay attention to that. Now, this was a fractal right here. All right, and then the market honored it. So it broke through and then bounced and then dropped. So then we look to the next fractal, which would be this one, where we are. And we just pulled back to it. So therefore, I'm looking for the market to drop. But I don't think it's going to be a big drop because we're seeing the smart money going to the upside. All right, we're seeing angulation on span A, flat on span B. And we don't have the crossover yet, but we're starting to get it. Chiku span's still on the price, so we're still weak. And Chiku span is still not even crossing Kijinsen. So until you get those things happening, you're pretty much bearish. I would look at trading this level right here. So what I would probably do, and same thing for BTC USD, my first focus would be to short this. All right, and it's the same thing here. My first focus would be to short this because all Ichimoku signals are bearish. We just got the crossover on BTC USD. All right, but you can't let that change you right off the bat, okay? Because you had a crossover here. See that? And then all of a sudden back to the downside. So you can't let that change you, but you got to look at other things as far as the structure. All right, so let's go back to this. And I'm thinking that you should look at trading to the downside on this and at least to Kijinsen here. All right, because Kijinsen's support and resistance. A lot of times you see the market break through and then breaks right back down. If you don't feel confident with this kind of setup, then what you need to do is wait for market to break Kijinsen. This is the best trade that you can take to the downside, the best spot you could be in. Let me show you why. Either the market's going to break to the downside or it's not. You can risk minimal. All right, so you would enter there and you would have a stop loss up here. All right, so that would be your stop loss. So we want to get that off. This would be your stop loss. This would be your entry. All right. The reason I say this is the best place you can enter short is because you have a resistance level above you. So if this resistance level is going to hold, then you realize your trade may work. If this resistance level is not going to hold, then you probably realize your trade's not going to work, and you can get in or out quickly. And if it doesn't trigger you here and keeps going to the upside, then you're not in a bad position because you never got into the trade. So that's what I feel like basically the best spot you could take this trade, because you never know what the market's going to do, but you want to trade the direction that Ichimoku's telling you at this point, and it's still bearish. It is starting to show signs of bullishness, but until we get that, because look at this cloud really. Nowhere on this cloud have we had this kind of angulation on this downtrend. All right, we didn't get any angulation like that on span A. So span A is pushing harder. So I still would short this. Now, if it closes above, then I would wait. So I do the exact same thing I'm talking about on BTC USD. So I would trade this short at this point down to at least here. Then my next target would be down here. If I can break Kijinsen. If I break Kijinsen, I'm here. All right. So I have my stop loss here. Now, the second thing would be if the market doesn't trigger us and pushes higher, then don't do anything. Just wait, because now you want to see if it pushes higher. You may find resistance at the cloud. We'll be able to take a short there because we'll be able to short to this level. When we get to this level, if the market cannot violate this structure right here, because this is going to probably farm into structure. If the market drops a little bit, then that would become a structure point. But also, if we can't violate this area, then we may see the market push higher. All right. Even off of the resistance here. And my N waves, I'm not even counting my waves at this point. All right. Because see, I'm still stuck in a bearish waveform. And here's where we are. We're at the 3 level right now, which means we basically are 1, 2, 3, and then the N wave to the downside. So if we were talking about targets, let's do that real quick. We're talking about where would this market go, because we want to mark that just in case. If the market's going to continue this trend to the downside, then it would push down to here. And we'd find our N value would be right here. All right. At 18085. All right. But you have to get through this 2 level. All right. So remember, you have 1, 2. This could be 3 if this level holds right here. And then 4 would be right here at our N level, our N value. N value. All right, so that would be our target if we short this market here. But that doesn't mean that's what's going to happen, because if this market's trying to change and this is going to be the low, we're either going to come down to this low and then push back higher. All right, but the next thing that could happen is this is the low. In order to make a move to the upside, the market has to make a higher low. This is the current low. It would push down, maybe not come to this level, and then we would see a higher low somewhere. All right, and that's what we would see. Then we would realize the market may be going in this direction, because now this would be the N wave to the upside, see, after it creates a higher low. Even if it comes back to this level, or pretty close to this level, I would still call this a N wave correction, reversal, because it would go like this. Once it violates this level, then we're staying with the structure. We're staying with this move right here. Right? Once it violates this point, because that would be this leg right here. And then we push to this leg, and then we push back down. Once we violate this level, then we're continuing to the downside. And then we look back for this point to go short again. And we stay that way until the market gets above Kijin's Yakumo here. So those are the kinds of things you look at. So I would look at shorting this, and let's go back to BTC USD, because I want to hit on this real quick. BTC USD is still bearish. All right, guys, don't let me change your aspect and get you all very happy. And the reason is because it's still bearish, because the same thing I just told you, this N wave right here. Now we might start thinking this is a higher low. All right, but if we look at this whole leg as one, then we don't have that higher low. If this is a higher low and then we did short it, then it shouldn't break this level if the trend's going to continue. So if we didn't count this as a higher low, then even if it shouldn't even come to that level, even if it does, then we're still thinking that the market will do that in order to continue a bullish trend. So until you get that 1, 2, 3 reversal pattern, or that N wave reversal, and the N wave reversal would be this low, this high, and then it has to make a new higher low, and then we can continue. That would be the new higher low. Okay, and at this point we don't have it, because we still have the N wave structure to the downside, and it'd be impossible for the market to do this straight up like this all the way and keep going. All right, it has to correct somewhere. So that's what we're waiting for, to make sure that we're still with this trend. All right, because the next thing, and you need that correction to make sure that the market's not changing direction, basically. Because when you get this, You get this, and then you get that correction, and then it goes and breaks structure here. Then you have the N wave reversal pattern. All right. And you start to see it when the market makes this low and can't go below it. And even if it's between two levels, then you start to realize either it's going to range or it's going to go to a new N wave to the upside. And a range in Ichimoku, when we talk about structure, let's say we get here, this is the high, and let's say this is the second low. This is the low. Let's say the market comes down here but can't break this level. So we're between two structure points. All right, and then the market doesn't break that structure point. What it does, it makes a P wave. All right. So when it makes that P wave, eventually it's going to break somewhere. Usually if you get a P wave on the bottom, then the market breaks to the upside. All right. So that's how you can kind of look at the structure to kind of feel what the market's doing. Sometimes I'm in a bad situation. I'm in a bad spot where I can't really judge the market based off everything that Ichimoku's telling me. I just would say period. If I just was running to the market right now and just looked at it, I'd say this is bearish. All right, we're bearish. But I wouldn't even talk about structure. I would just look at Ichimoku. The market is bearish. We are in a correction right now. Is this correct? This correction needs to correct. All right, in order for this to be a trend. All right. So hopefully you understand that. I get too lost in this stuff. Hopefully I'm not confusing you and so forth. If I am, just let me know. Again, structure. This looks clean. Okay. And if this level holds, then we see the drop. Then what we're looking for is this. I think we see something like this. That would be the N wave reversal. But you also can say we may push only to this level. So what it would be then is going to be something like this. It would be push up. Kijinsen maybe holds, and then it goes higher. All right. A lot of times when the market pushes above Kijinsen, and we're bearish like this with Ichimoku, because your cloud is very bearish. You do have some angulation here. Your crossover didn't develop yet. Chiku span is well under price. All right. So what we would be thinking, I would short this because we would be in the line with the trend. And then I would just watch to make sure it doesn't change on me at the levels that I'm talking about. And in order for it to continue, it just continues down to this 2 level because we have 1, 2, 3, and then we're shooting for 4. All right. But if it can't get past 2, then once we violate 3, then we know we're in a new move to the upside. That's the way you look at it. So sometime like when I look at the market, like right now, I'm in between. But I really, if I just don't overthink the market, then I just short this level because we're bearish. And this is a resistance point that I should be shorting. All right. So if I don't tell you, oh, we broke this structure and we did this and we did that, we're short because we hit a resistance point and the market is bearish and we're in bearish N waves. There's not more I could say. It's a bearish market right now. And just because if it breaks this level, we're still bearish. All right. Because again, here's your Chiku span. Needs to break that Kijinsen. You need the crossover that you don't have yet. Your future's still dark. And the price is below the cloud. Once it gets above the cloud, then we can start changing the real bias of the market. So you don't want to overthink it to the upside. You want to just trade what you see happening. And we're at resistance right now. So trade that to the downside right here. I get you to overthinking the market and talking about all different things. I could tell you too much stuff and then really confuse you. All right. So with this chart right here, Sol USD, pretty much the same thing. Now let me show how I talk about structure all the time. I'm going to mark every structure level just to show you what I mean. So here's the first structure level, and it would have been a zone. The market came up to it, and this was the zone right here. So I'm going to mark it as a zone. Let me mark all of these so you could see if it works. So this would be the zone. The market broke, came back up here, and then shorted. But see, now this is the same thing that we just are looking at on the other charts. So this is bullish, right? This is a bullish market. This is the opposite of what we're looking at like on the other charts. So we got this high here. The market reached this high, and we also had this major divergence. So let's look at that also. So I'm going to mark that divergence, and then I'm going to help you to really understand why I'm saying the things I say. At this point, look at the divergence here. This market dropped, All right. So it's a bullish market still because we're well above the cloud, but certain things started to happen on this chart. All right. Now, when we got to this point, Chiku Spam was still above price and it didn't break this Kijinsen yet. All right. Let me actually see here. So we're here 2, 3. So Chiku Spam was about here in this area. So in this area, it was still above price, right? But structure wise, you could see the market changing direction, but still it was bullish. All right. So at this point, if I would have told you to short the market here, you would have not thought to short the market because we were still bullish. Right. But see, when I look at the market, I look at the structure levels. And then when I see these structure levels, the market broke the structure level that I marked, this level right here that extends all the way over to this point. This is the level where this wick is. We broke that structure and then we pushed up to this level. This is where I tell you to short, but you wouldn't want to short it because you would say, well, price is above the cloud and our crossover is bullish and this and that. Well, the structure of the market tells me more than Ichimoku. Okay, Ichimoku's an indicator. The structure of the market is what the market is really doing. So that tells me much more, and it tells me much way before. So people that would be following Ichimoku would not realize what's happening here. But then also if you follow Ichimoku, you should start to see what's happening with your N waves. So we could say we already had an N wave reversal right here, right? But then if we want to make it a bigger mark, we could say here's your N wave, 1, 2, 3. So if the market's going to be bullish market, all right, it has to keep going to the, see, this started a bearish N wave already because we have a V wave right here. All right, in order for this to be a bullish N wave, we would have needed this. So we had this, and then we had this drop here. So we had the bullish N wave here. So we want to go to our next level. All right. So then we're going to look at this point, 1, 2, 3. This is where we violated here, but we could still say we're even because we didn't really close below. So the N wave would be here. But now when this N wave didn't break this level here, didn't really close above it really, then we started to think that the market was getting weak because now you saw N waves to the downside. All right. And this was the start of a new N wave. So if you look at the whole chart, N wave to the downside. And there you go. All right. So the N wave to the downside started. You already had this wave here was one N wave to the downside. So we start counting a new one. It didn't violate. So we still had this N wave to the downside. All right. But if you're looking strictly at Ichimoku, you're saying, oh, well, this is still bullish. That's why I try to tell you about structure also. So you don't just get lost on that. Where are we? Where are we? Oh, okay. Yeah. So I just wanted to make sure you guys understood why I'm saying the things I say down here when the market is bearish based off of Ichimoku. The market was bullish based off of Ichimoku here, but look what happened. The market dropped to the downside from this point down. Ichimoku wasn't really ready until this point. Half the trend was over already. All right. And at this point, I don't take this first breakout trade myself. So I always talk about pulling back to that structure. That was the one structure. Let's mark the next structure level. So here's the next one right here. The market broke, pulled back up to it, broke it a little bit and dropped. Mark the next structure level. There's your structure level. The market broke, pushed back up into it, and then dropped. So mark your next structure level. These fractals. That's why I tell people fractals are not unimportant. And fractals are not lagging. All right. The reason I say they're not lagging is because when I mark these levels are marked ahead of time. And when the market gets there, I short it. So that would be the same thing. We mark this structure level. When the market gets up to it, we short it. So it would be the same thing as you're seeing on BTC USD. Structure level, short. You will be the same thing you see on ETH USD, structure level, short. It is what we see on SOL USD right now, SOL USD. So, but the only thing with this is we pushed up into the Kijinsen level, which is a good level to trade short. Now our cloud is a little bit thick and we got angulation to the upside, all right, with span A. So that's not good as far as thinking that this market's going to be bearish. But we're still in this N wave that is bearish. Look, in order for this to change, we need to see this. If it pushes down, so we still look for the short. If it can't violate this level, then what happens is this is a V wave, right? And then it becomes an N wave when we violate this point that we failed to break the first time. So that becomes a N wave reversal pattern. All right, but until that happens, it's a bearish N wave until, if we do this, we need to violate this level. And until we don't do that, then we're going to consider this market bearish. All right. And if finally, so we look for the next thing is to short this market right here. I would short this. I would short it down to this level. I don't think we get there, but maybe. We're thicker here. We're starting to see, we already started to see this major divergence. All right. Because if you mark from the same points, this was going down. And this was going up, and then finally it started going up. Now the smart money is showing upwards. So that's the way we think we're going to go. Now, even if we get this drop, if we still have smart money going to the upside, then that's probably what we're going to see. And we won't violate this 2 level. All right. But I still short this because we're still bearish. And that's what you trade. And I would still even short when I got to this point. All right. So I wouldn't change anything about the way I trade the market until the market really violates Kijinsen. I mean, not Kijinsen, sorry, until I violate the cloud. I pretty much want to be bearish. Let's move on. Matic USD. Let's look at this thing on a bigger time frame. Let's go to the weekly. 1 week, 50 years of time here. It doesn't have 1 week, 50 years. It doesn't have much. So I can't change this because what I'm using for this broker doesn't give me the data that I need. So if I was on TradingView, I could look up more data for this. But what I'm looking at right now, let's just look at the main thing first. The main thing is this. So we don't even need Ichimoku here. Let's mark the structure level, the last one that we had. It's this right here. This is a good structure point. Now, we did have this move here. Overall, we're following. The smart money is still bullish. Now, we just broke above this 80 level and then broke back below. I think we could possibly look for a bounce here because what you would be seeing the market doing, it's currently in a bullish N wave, right? And we're on the second leg of it, getting ready to have the third leg, the final leg. And here's how you see it. 1, I'm going to mark it after this. 2, 3, and we're shooting for 4. So that would be 1, 2. You got a V wave right now, and then you get that N wave. We need to break 2 always, or else we're not going to violate 2, and then we start going to the downside. What I look for when we get to 2, I put a video out this past week where I was trading divergence. But it was basically day trading, but it's the same thing for divergences. Divergence is the same rules. So when I look at this top here, if we have money flow index going to the downside, yes, we could probably get a bounce here. But if the market gets here, right here like this, like basically a double top, and money flow is going to the downside, don't suspect that the market's really going to break this level. Even if it breaks, it may not be going too far because the smart money is not following your trend to the upside. It is not following the current move to the upside. The smart money is bearish. So therefore, that's what you would look for at that point. All right, so even we could take this long here. This is what I would look for as a long at this point. All right, I would trade this market up to this level at first. And then if we could violate that level, we shoot for the next levels. So as long as money flow keeps going to the downside, once we take this trade and we go to the upside, If we can't violate that level and money flows bearish, you better get to the downside or take profit at least. But let's see where the target is monthly wise with our N wave. Let's put that N wave in here, and it will go 1, 2. We got to break 2, and we're holding this as 3 right now. That would be our target longer term, you know, months from now. That would be your target. So let's go to the daily. So daily, looking flat. Coming off of this level, I have divergence. Okay, so I think that the market is going to bounce here. Let me tell you something. We just talked about the move on the weekly chart and the support level. So this all lines up with it. So let's do this. This is how I really look at the market. If I made up my mind on the weekly, and if I'm making up my mind on the daily or whatever, so let's go back to the weekly. If I'm making up my mind on the weekly to go long, all right, based off of Ichimoku or anything, then what I like to do when I go to the daily, when I go back, I already made up my bias, so I'm going long based off of the weekly. When I go to the daily time frame here, right, I like to do this. I like to take Ichimoku off the chart. Reason being is because I already have my bias now. All right, and then what I like to do from this point is trade long. So I look for that long trade. So we talked about the big N wave on the weekly time frame. This is that big N wave. And then we would bounce here and look for the upside move, take us to the target that we talked about. That's what we would be looking at. But on here, I'm looking for a long because we also have divergence. All right. So you see this is flat. Let's call this the flat area. We're pretty much the same. We're flat. We haven't closed below this zone right here, but we came back to the zone. So we came down, bounced, and came down. So in order for, all right, so here's the start of an N wave. Let's do this again. So now we can look at this. So this was the N wave, and that can't just keep going to the upside. So therefore we see a V wave, and we kind of realize the market may drop to the downside and create an N wave, and that's what it did. All right, but now look where we are. So where we are now, we have this move here. In order for this to create an N wave, it needs to violate this level and keep going to the downside. All right, and then if we violate this level, then we get a new wave. Now at this point right here, so we got this right now. All right, and that would be the leg, the third leg, 1, 2, 3. So you have an N wave, but we need to violate this level. If we don't violate that level, then you could look for the market to either range here, form a P wave or something, or else we're going to bounce off of this level. And I like to bounce off of this level because I like this divergence. This is where the smart money is looking. But this is where we are. So I would look for the move to the upside. Based off of what we said with the weekly, I take a long at this point. All right. So I'd like to take a long look at price action to get into the trade. Sometime I trade the zone. I walk the zone. So what I'm talking about is, like, depending on how big the zone is, if I can afford the whole zone, I'll walk the zone. So in order to afford the whole zone, that means your stop loss is, if you enter here, your stop loss has to be below these wicks. So if you can afford that, then you can walk the zone, because what you want to do now is this. So definitely already starting off, here's your stop loss and here's your first entry. If the market goes lower and goes into the middle of the zone, then you definitely keep your entry there. But if the market goes down to where it is now or lower, then I put an entry in the middle of the zone. Move this entry down to the middle. It eliminates this little bit of risk, and now my only risk is down to this point. All right, so I just eliminated half the risk. So now I take the trade and I look for that long opportunity. That's what I would be looking for with Matic BTC. All right, and I like this chart. Now, just because I like it, guys, doesn't mean it's working. All right, but that's what I look at, and that's how I judge the market. Let's go to Link USD. Let's put Ichimoku back on the chart. Let's go to the weekly time frame, see what we got going on with the week. So it pushed back down to this level. It didn't really honor this monthly structure level here. I mean, it did, but not real well. Because the first time it came down and sat, then we broke a little and went higher. We honored it here and went higher. Now we broke just below it. When we broke below it, you could see from this point here, look what's happening with the market. We're having divergence. So it kind of looks like we're going to see a move to the upside, all right? But we do have this N wave right here, but it failed to close below this level. That's when we start to see maybe we get that push up, stuff like this, all right? So I still look at a long opportunity right here. And I would take that trade right here. Stop loss here. Take the long based off of the weekly. Now let's go, and you can see we're flat here. So pretty much thinking what we're saying. And then also we got a big gap here with your cloud. Let's go back to the daily. So the daily, yeah, looks like the daily would try to push off, but we're in a bearish market still, and we're in a bearish N wave. Now the thing is, we had this separation, so, and also we had this divergence. See, this was already coming up right here. So this is where we had small divergence. I consider this flat right here, right, where these bodies are. But at this point, we were coming up. And even if you don't consider it, you could see where the smart money was going. It was going in line with this. So does it continue? All right, based off of Ichimoku, we're bearish. So on the daily time frame, we are bearish. And we were on the monthly, we were flat really. So on this daily, I still continue to trade short. All right. But I think this level is major. If I short this level and I can't get through this point here, mark this, then we're pretty flat. We're going to range. And I think we are just basically looking at a ranging market, because look what's happening here. I don't know if we're going to break this level. Have a lower low, same thing. Had divergence here, and then the market dropped. So there's no signs for me to say that anything's going to change, right? So, and I told you based off of the monthly, it was looking like a long opportunity, but immediately on this daily. So I mean, off the monthly, let's go to the weekly. Sorry, I didn't look at the monthly. I was looking at the weekly, yeah. So based off of the weekly, we said we were bullish. Let's go back to that, because we're looking at a bounce on this level, and we had rejections on this level. Now, remember, I think we're flat, and I think we are going to bounce here. And I can see the market's very flat, because look at the crossover flat cloud, expanding cloud with the market doing nothing. We failed to violate this level a couple times already. All right. And we pushed back down to a nice structure level. So looking at this market pushing higher. Now, this is where it was bearish with the money flow, and then the market flattened out, and it was even bearish here. Even when we pushed up, we were bearish here, money flow, and then the market dropped. Now where we are, it's showing bearish, but the money flow is starting to move to the upside. That's why I'm thinking we're going to bounce on this level. It's a strong support and resistance level. But on the daily, it looks like we could drop more, right? So I got kind of mixed signals based off of the daily and the weekly. Let me go back to the daily. Therefore, what I would suggest is you follow that daily until you break the cloud. So what I would do is this: if I trade this short at this point, you know, your stop loss is just above the candle, you're going to short this based off of all Ichimoku signals. I don't like the clamp, because the clamp tells me we're going to come back. And also, my cloud is thick, but I'm not really rolling over yet. So we could probably see a push a little bit lower, even if we violate this level. But the thing that I would change my bias on is when this, if this happens. So we could probably short it, but let's say it breaks higher. Then if it pushes back to this structure, then I would start to think we have a change. All right, we have a small N wave right here that developed. But the bigger structure is bearish. But the smaller structure could take us, could take us even up to this point. All right, that's what could happen with the smaller structure. But based off of the weekly, that's what I see the market pushing higher. Now, this level here where we are, I would wait for the break, then tack it, and then trade. If not, I would short this level. All right. And what I mean is, if not, is if we close below that level. Stop loss here. Short, pushing at least into this area. Try to push down into this area. Get a short here, and then hold on to it. What I would do is see how the market reacts at this level. If we get a big candle that goes through, I just hold on to my trade. I bring my stop loss all the way down to this level, depending on how far down it goes. Because if you still have divergence on the money flow, then eventually we're going to see the move to the upside. All right. I like to really see that at support and resistance levels. And we're at a major support level from the weekly. And that's why I'm thinking that, yeah, we could push down based off of Ichimoku. But I think all the things that we see on the higher time frames, we're going to start to see the move back higher. All right. So that's what I do. And again, I tell you, I prepare for both sides of the market. So currently, that's what my short would be. All right, so that's going to be Link USD. Let's go to Doji. Let's go to the weekly. Looking at the weekly, we're pushing towards. And I don't know why I made this level. I probably made it off of this low, these two lows here. But the main level that I see, another level I want to see, is this level. What's going to happen there? I'm going to take this one off. Could it push to there? Yes, this is very bearish. Look at the money flow. All right. That money flow angling to the downside really hard. And there's no divergence here. So let's go to the daily. See what that's doing. So on the daily, starting to see slight divergence. So we could see a push higher. This market is bearish based off of Ichimoku. You're very bearish. The push higher could mean we push up to Kijinsen. All right, so we could get a push up to Kijinsen. So I'm looking to short this market. So I don't do anything right here. So in order for me to short it, it has to come to a couple levels here. And I'm going to show you. So my one level that I would look at the market coming back to would be this structure right here. So maybe we push up here, or we push back up to this Kijinsen. And then I would short it. But at this point, I don't do anything. I think we may see the market push a little higher. Then once we get into these areas here, then we could look to short it. Then if we could short this and we still have divergence, then we know we may not violate this level. All right. And where was that other level? Let's go back, see what that level is. This level. So we're saying basically we could push up into this area here, see the market push up, and then we short down to this area if we can violate this area. So what we will be talking about is we're continuing this wave, then push up into here and then back down to here. Let's see what the target would be if we get a short. Now our short target, our short entry is either here or your Kijinsen, your flat Kijinsen. All right. Now what I'm looking at, let's see if we can mark this. We don't know exactly where that is going to stop, but let's say it stops either here or here. So the farthest we would get, and then the target we would shoot for, depending. If we get into the trade, if the market pushes back to the Kijinsen here, then you're looking at this level right here, 0.724125 for a target. But if it could only go to this level, then our target is a little bit lower, which would be right here at about 0.612128. All right. So I am looking to short this market if we could push up a little bit. I want to short here or at this point. The main structure again is there. Then we push back up into this structure area. Then we look to short. We need to violate 2 to continue. So again, you got 1, 2, 3 could be where it is. 3 could be here or it could be here. So wherever 3 is, we're going for 4. All right. Those targets that we just talked about. So that's what I see with Doji USD. Let's go to the next LTC USD. Let's look at this weekly. So weekly, again, these are all at some very nice structure levels. Got too much distance here. I think you're going to see this push higher. Now, slight divergence, but not major divergence from this point. All right, but a little bit of divergence here. Strong angulation still, and I really can't go against a lot of this stuff right now. I like to see it rolling over. That could take a while. We got a little bit of distance here. Look at how this is hanging to the downside and Kijinsen's flat. So maybe this support level is a good level here. Let's see what the daily's telling us. All right, so daily. I'm not even seeing real divergence here, and we're at a great level. All right, and we rejected. All right, so what I would do is this. Let's go back to the weekly real quick. Again, the thing that my issue is that we have a support level and we have this price action, which right now, this is a morning star looking like a move to the upside, but the smart money still looks bearish. All right. But we still do have this strong weekly support. Are we about to violate that? Because we have distance with Tenkan-sen and Kijinsen. But the cloud is getting thicker, but it's not rolling over yet. That's the major thing. So when I'm talking about it rolling over, this span A cannot keep going to the downside like this. We need to see it flatten out and roll over, and span B flatten out. And then that means we're probably finding the market move higher. But at this point, we can't really tell because we could be pulling back to this structure really quickly right here. See? We broke it, pull back to it, and then we back to the downside. But I don't know how far we go. Let's mark this. See if we could see this. I can't because we're still in this. We didn't even get the V wave yet. So that's why the push up is the main thing. Because in order for this to start anew, we need to see a push up. And then we will get that N wave to the downside if we're going to violate this area. So we're kind of mixed on daily. Let's mark this strong resistance point from the weekly. Because if we're going to go long on the daily, we could push up to this level. When we're pushing off of this support level. All right. Now let's go back to that daily. Where are we? Oops, that's the weekly, sorry. So for me, I like the short here, but if we violate this, then I'm looking to short up in this area. So if the market, I would short this market based off of what you see on Ichimoku on the daily time frame. Short this market right here. Try to get to this point so it takes us back to this level. So in order for this to continue, let's see where our targets are. Let's mark our targets. So this would be N wave here, and then we stopped here. So we'd be shooting definitely for about 70.545 for this to drop. But our first target is going to be this 2 level area. So it's going to be about 106.095. We're pushing back down to this level. If the market doesn't trigger you off of this rejection candle, then the market's more than likely pushing back up into this area of resistance. I would short it again at that point. That's where I would look for my short. So I'm saying if you can't get the short here, because I would take this short below this level, below this candle right here. This is what I would trade at this point. I messed that up. That needs to be there. This is what I would trade at this point. This level right here. I would short this rejection candle right here. My entry, my stop loss, my first target, and then my overall target, which would be this level. All right. 96,950. I mean 69,950, sorry. But if the market violates and doesn't trigger, then we get up into here. This is where we start to look short again. To really violate structure here, it would have to violate this high. All right. And then we start to see the close above the cloud. We're below, Kijinsen's below, Chiku spans below price, price below the cloud, your future's still dark. Why are we trying to go the opposite direction? We shouldn't be. Let's get the bounce off of this level or this level where we are now. All right. Sushi. Let's go to the weekly. 1 week. Nice. Again, they all have some levels. I marked this level based off of this point, but it wasn't a certified support level at that point. Just like this one wasn't, and it got violated. So this one also could get violated. The smart money is still going to the downside. Slight divergence, but not much. The all-time lows are pretty much near here. And we could be seeing a drop below that, below this level where we are. Crossover's bearish, not a lot of distance, thicker cloud. It's not rolling over, but it's flattened out. So maybe we're going to bounce here. Maybe we see some support, then the drop. We are in an N wave to the downside. We're in bearish N waves to the downside. Let me show you. 1, 2, 3, 4. 1, 2, 3, 4. So 1, 2. It could push up a little higher, then break back down. So we could bounce here a little bit and then break back to the downside. Let's go to the daily, see what that daily is showing us. All right, daily. So again, like we say, the daily could push up a little bit. Thick cloud, don't like that. And we do have some divergence. So where could it push up to? Here's the divergence. Pushing up, smart money. This from that point, this is still going down. Now it's starting to push up. Let's see if it pushes up to this level or my Kijinsen. At that point, I shorted. All right, because we're in N waves to the downside. Even on this big chart, I mean smaller chart. The weekly was bearish and it showed a bearish N wave. We just were at a support level, so we could see a little bounce, but that bounce could only be up to this point or this point. So therefore, and the cloud is thick and it's rolling over a little bit, but not all the way. We are seeing some divergence, but I stick with this trade to the downside. So we haven't pushed off of this level much. The N wave to continue would be, and I'm not going to mark anything yet. Well, I'll mark it. If we only push up to this level, or if we push up to this level and then back to the downside, that's your N wave. So you're currently in a V wave, so you're still bearish. All right, so let's mark where targets could be, quite possibly. Depending if you come to this level here, where the yellow line is, or if you come up to Kijinsen, you're going to find targets at this level. We're going to trade to the downside, and we're looking for the market to push down to about 17521 or 11821. All right, so those between that area, that would be your trade target. So let me mark that about there, and the next one would be, we could probably push back down to this point. So that would be your targets. All right, so you'd be shooting for that target. So basically, once we get into the short, we're going to shoot for this area right here. So we're looking to short this market. But are we going to short from here? Or are we going to short here? That's just to be determined yet. And even then, I could be wrong because the market could push up to the cloud, find resistance at the cloud. So you got 4 points of resistance with Ichimoku. You got your Tenkan and Kijinsen, your cloud lower, and your upper cloud. All right, those points you look to short the market if you're below. So at this point, we're looking to short the market either at one of these levels. Maybe the market doesn't go through those levels, then it violates this. If it doesn't push up any higher and just drops, here's what you want to trade. Here's how you want to trade it. Mark your zones, all right? The market breaks, doesn't give us a trade at these levels. Then we wait for the correction, and then we short it at that point. All right, and then we could still catch the trade. That's how I look at trading that market. Right now, I don't do anything yet. I want to see if I get my trade here, here, or here. And it could even be at this point. So these are the levels where I look to trade the market. Until the market gets to one of those levels, I'm not going to look to trade it. That's how you got to do is have levels in the market where you're going to trade it. You don't just trade it any old where, oh, it looks nice here, I'm taking a trade. Negative. You need to have a level of support and resistance, something that's going to be able to help you to hold that market from going against you. And even then, you're not guaranteed, but it puts you in a higher probability trade by trading at a level, which would be a support and resistance level. And I just drew 4 of them for you here at this point. And those were where I would trade the market. BCH USD, let's go to the weekly on this thing first. Let's go to the weekly. Again, they're on in some areas. This isn't a good area. It's very bearish. Could push up a little bit to this zone, but it's still going to be a bearish market overall. But this zone is right here where it could push up to. So where it is, it could push up into this zone and then continue to the downside. So we could be, and look, when we marked this previously, you could see where we hit off of. We came right down to the 1-to-1 level. That measured move, that N wave that I talk about, that N value that I talk about. So let's go to the daily, see what that's telling us. Again, so we could be shorting at this point, really. This is a bearish market. We're looking to short this market. But it could push up a little higher, and this would be the zone where it would push up. And so let's even make it even better because the daily zone is right here. The daily zone's not as big. The daily zone, let's put a line at the middle of the daily zone. Where the daily zone is. It's going to be right here. That's the daily zone. This is the monthly zone. We're finding resistance at Kijinsen. We're still in N waves to the downside. Let me show you. 1, 2, 3, 4. Remember we drew this out and we talked about this level. That's where the market came to. All right, so that's where we are. And then we have this leg now. 1, 2, 3, and then 4. So we don't know if this is going to hold or if it's going to push up into this area. The way it is right now, we're looking at this level holding. We short below this level, stop loss here. If that violates, then we short again up at this point in this area. All right, but I look to short this right now and then short it down to where's our target going to be. So this is a bearish market. If you're looking for a long opportunity on this, I don't see it based off of everything we're looking at. So this next level is going to be 1, 2, and then if we're taking a trade right where we just said, then we're shooting for this 191, 199. So that's what we shoot for. First level we shoot for would be what? This level. Got to get through that point first. So you need to definitely get through that point right here. So we're going to short here. So our entry is going to be, we talk about entering right here. Stop loss a little bit above. Keep us tight. We take the trade at least to this point. That's your 2 level. This is your 1 level. This is your 3 level. And then we're shooting for 4. This could be your 4. But if we can violate that, then we're shooting down for this point right here. That would be our 4. And we would have this N wave. You see it right there? And that's what we would have market-wise, structure-wise, shooting for that 191 and 199. I like this setup. If this doesn't give us the opportunity here and pushes higher, then this is where we get into the trade. Then your targets are going to change also. So if we get up into this area, let's just say the midpoint, then everything changes, because now this is not the high. This is not the 3 level. Once that 3 level is developed, we could really start figuring out where we are. If this is going to be the 3 level, then we're barely getting back. Well, we're going to get a little bit past this 2 level, and we would shoot for 226,523 if we can't catch the trade here and it pushes higher. All right, and then we would be in this area. So you can always mark your targets once you get that 3 level, because if you get at the bottom here, the middle here, the top here, it's going to change your level a little bit. All right, and that's your N wave. That's Ichimoku N wave. Let's move on. Let's go to BNB USD. I like this based off of the daily. Let's go to the weekly. See what the weekly is telling us. The weekly. So the weekly is bearish too. It's actually bullish based off of Ichimoku. Sorry, we just got the crossover here, but the you can see this smart money going to the downside. So I'm saying we're bearish based here, but overall it's a bullish market. But you could see where we're starting to go to the downside with the money flow. Our structure is changing quite possibly. Let me delete that now that I moved it. And we pushed back up. So we're starting to form new structure here. Let's say, and I'm going to push this even higher. I'm going to push it right there. This is the total level right there. So really what we did, guys, is we broke. We pushed back up into this zone right here. And then we look for it to short again. All right, longer term, where would this market be going to? Longer term. So longer term, we're looking at this market going to, let's say that is the high right here. We're thinking about 97.488. Now, let's go to the daily time frame, figure this out. Daily looks like this. So we're right in that weekly zone. I definitely look to short this. I definitely look to short this market. Okay. We have a little bit of angulation to the upside here, but nothing major. We have a nice rejection at Kijinsen. I would definitely short this market at this level. Stop loss up above this. All right, you're following structure here. Look at the N wave. That was the first wave, and you pushed back up into this level right here, this area also with the daily. This is the weekly one right here. Here's your daily. We pushed back up into it, and we're rejecting it right now. Therefore, I'm looking for the market to drop at least back to here. Then we'll see if we have divergence. If we don't, and we can break through, good. That'll continue this N wave right here. But if it can't, then you probably get, instead of getting the N wave, you may get the P wave. And then a move higher or lower, wherever it's going. All right. So that's what I look for. I would short this market there. Stop loss. Target here. And then the overall target, the bigger target, is going to be, if we could, on the daily time frame, we're going to set that daily target. It will be 1, 2, and then if this is the high, then that daily target's going to take us to about 261, 196. All right, that weekly target is way down here, right? This would be the weekly target. So longer term, we could see the market dropping way down there. Way down to this level longer term. Based off of the daily, we probably look at hitting down to this point, at least down to here. I would short this. BNB is very bearish. All right, Comp USD. Let's go to weekly. 1 week, 50 years. Again, at another level, this is the low right here, near the all-time low, and at a good support level, got a little bit of distance here, no divergence, and then you got angulation still. We could probably still see more downside on this based off of the bigger picture. Let's go to the daily, see what that's telling us. 1 day, 50 years. So what I would look for, this is a very bearish market still based off of the daily. So we haven't changed anything yet. We're still in a nice N wave to the downside. What I look for, guys, is for this market to pull back to either Kijinsen or to the flat level here, which is going to be our fractal level. So we either look for the market, we're looking for the market to push up to that point. So right now I look for the market to move higher, but I look for it to move higher to these points. And then I'm looking for the market to drop at that point. If whichever one of these points, you can see the money flow right now is bullish. All right. But overall, it's like still bearish overall, the bigger picture. Okay. So look for your trade when the market gets up to this point. And at this point right now, I think you're going to see the market push higher. Okay. Because we're at a good support level and we have nice divergence. We show the smart money moving to the upside currently. So that's what I would be looking for. I wouldn't be interested in this till it got here or here. I'm not interested in doing anything with it. Now, if it doesn't push to any of those levels, then what do we do? Again, same thing as always. We do this. You mark this low. Watch for the market to violate that low. Push back up to that low. That's where we short it and then go. So it's not always going to reach our targets. Our areas where we look for the trade, and sometimes it doesn't push higher and just goes lower, then we just go back to this bottom now. Prior this bottom, prior this bottom. So look at, we hit a lot of these bottoms. If you continue to trade the way that I'm showing you, I already marked this one. We haven't pushed there yet, but previously, have we pushed to any of these previous levels? So this level was one, we kind of violated that, but we pushed up to this level right here. See, this is what we look for the market to do. That's why when we're down here, I'll tell you no trade. It's bearish, but we're going to probably see it push higher to this point. And there's where it goes to, right to that point. And then I would tell you, this is where I would look to short. In this case, it pushed back up here twice. You know what would help you when you see it push back up there twice? These two highs, we'll say these are even, right? But you got divergence on the money flow. So you look for the market to still drop. So I think we push up to those levels. That's why we same thing we mark here, would have had the trade here. That's the same thing we're looking for here. We stay bearish. Ichimoku's bearish, your crossover's bearish, your future's dark, Chiku span's below price. There's no signs of this being bullish. You might get a temporary push to these levels, but then you want to get back on the direction of the market. OMG. Oh my goodness. The main level probably is here with this. And we just kind of like bounced off of it. Make it into a zone would be this right here. So that's the zone of support. Based off of the, you could see we got some separation with Tinkinson, Kijinsen, pretty big. So maybe we see the market push down to this area and then maybe push higher. It's still very money flow, showing strength to the downside, basically more supply than demand, stronger supply than demand. Let's go to what? Let's go to what? Daily. So on this daily, I probably look to short this thing right at this point, right where it is. We're right at the good level. All right, so I put my entry right here. But we talked about how we were getting some distance, but we could still see it push down. It could push back down into this area here. All right, so if this is going to be the level, then our target would be, so if we short right here, our target, because we can only market if we have an N wave, all right? So then we're shooting for about 2.0125. So if we short here, we're looking for the target here. If the market pushes a little higher, it could push up to this area here. Let me mark it different. Let me mark it with this. It could push up into this area here. Mark it into a zone. There's some structure here it could push up into. Plus you have the cloud here. But I still think we're bearish. We're not seeing any change. All right, not at this point. So I would look to short this market at this point. So price action, I really get into the market on. Indecision candles, I like to get into entry. So what I'll do is if I have, so this is our support level. I box these candles in. And the way it breaks is the way I expect it to go. So if it breaks to the downside, then we'll probably see it push lower. If it breaks to the upside, then we're probably pushing up into these areas. All right. So those are the targets that we're looking for. Think this is still very bearish. You may see a temporary move a little bit to the upside. Don't get too happy. Overall, we're going to be shooting for about 2.125 bearish market. Don't get too happy. If it pushes up higher, it's only pushing up into this area more than likely. All right. SAN USD. Let's go to the weekly. This thing is trying to push through one of our levels. Let's look at it. Why is it trying to push through our level? Because we're still, I think it's still bearish. Look at the money flow. Longer term is bearish. So it's probably pushing up into this area right here. Right there. And what I'm gonna do is mark this. And then I'm gonna take this, get rid of the left ray. And that's where we're looking for this thing probably pushed to. So let's go to the daily. And that's where it is. All right, pushed right up into this area. So we're still very bearish. What I do is trade the low of this level. All right, let's see what the market does here. Let's see what price action it gives us for the daily candle if we can get a short, because I would look to short this to the downside. We're at a very good level based off of the daily, but the weekly resistance is right here. The daily resistance is here. We broke it a little bit, so the weekly is right here, right at this level. And we could push a little bit higher and then probably see the drop. We're still in a very good N wave to the downside. Right now we have a V wave. It's not going to change like that. It needs to drop in order for this to change direction. And what I'm saying is this. This is the V wave. It can't keep going like that. Something has to happen. Even if it's going to go to the upside, it still needs to do something like this to go to the upside. It's not going to do that. All right, more than likely. So it needs to do that. So if we're saying that, then somewhere in here it has to correct and then move higher. But overall, to me, it's bearish. And I'm not even thinking that it's going to do that, because what we're seeing right now is this, the V wave. And then we see the N wave completion. So we're looking to short this market right now. In between this area, we want to short this market. We may get better price action in the next daily candle. We see what we got. But that's the area I would look to short this market. My target, definitely have to get to this level. So you always got to shoot for this level. Got to get down to here. And then you got to mark your N wave. So you have 1, 2, 3, and where's 4 going to be? That's what we're going to look at and see where that's going to be right now. Here's 4 is going to be 1, 2, 3. This is 3 until it's violated. So we'd be shooting for 167.040. All right, that's what your target would be. Either target's going to be 282.547 or 167.040. These two levels. All right. Money flow broke the 80 level. All right. So I do like that. That's a nice, I like that setup also. Let's go to the next TRX. Let's go to the weekly. Here's the support level, actually. And we all really had this. This should have been a zone. Actually, we'll just put a line because we got one level. So we put this level right there. See, that's the zone of support. Flat market on the weekly. So the weekly is showing we could bounce here and push higher. Okay, based off of the weekly. The money flow. It's a little bearish still. Let's go to the daily. See what the daily's telling us. Right. So the level that we pushed up to right now on the daily is this level right here. I look to short this market still. I'm looking to short this market. So what I would do, since this is the zone, let's move it away. We don't need to see it. I look to short the market right here. I'm going to mark that level. I look to short it right there. I put a stop loss above that level. I wouldn't put my stop loss right on the level either. So that's what I would look at shorting at that point. I definitely shoot for this level right here first. So my target would be this level right here, basically 0.0559650, right at this level. Shoot for that short to there. But overall, our target, our basic end value target based off of Ichimoku would be we're shooting for 0.449456. All right, that would be our target because this is the wave we're looking at, end value. Our end wave and our end value. This is the end value. All right, this is the end wave. This is Ichimoku end value, end wave. Wave analysis, price observation theory. All right. That's how we get those targets. And then we could use time analysis also, but we're not doing that. It takes long. All right, so let's move on to the next, which is going to be UniUSD. And I have one more after this, and then I'm done. All right, so let's go to the 50-year, 1 week, 50 years. This is the low where we could see, this is the support level. So we're looking at more downside. If the market was going to push higher, it would push up to this level. We look for it to push up into this point and then continue to the downside. So if we do push up here, we could probably see it push up into this area, then push back lower to this level at least, and then ultimately down to the low, all down here, this double low. So let's go to the daily. All right, so daily we're bearish. Now Ichimoku is showing us that we do have some gap here. So let's look at the market pushing higher. All right, so I do think we could see the push higher up into this area. So this is where I would look to short the market. At this point, I don't do anything. All right, I just wait for the market to push back up into this area. We got separation, flat Kijinsen and Tenkan-sen's too far apart. Flat clouds, flat Kijinsen. Let's look for the market to do this. Push back up into this area. And then we could look to short it. That'll keep us in this end wave value. All right, at this point, you don't want to do anything unless the market fails to break here and then comes down to this level and violates. Then we trade the bottom. All right, but I don't see that. I see we're flat here and we got too much distance. See this Kijinsen, this Tenkan-sen and this Kijinsen, they got too much distance between each other. So the market's probably going to correct. And sometime it corrects, or else it stays flat right down here until they catch up. So again, like I said, if it violates this high here, closes above it, then it's probably pushing up to this level. If it can't close above this level, then we're going to range here and then probably eventually break that level. So that's what I would be looking for. Very bearish still, no signs of change here. I wouldn't short it yet. I wouldn't do anything. I wouldn't even go long with this yet because, again, I told you it could stay in this area and range until Kijinsen catches up. Or it could move off of this level up into Kijinsen, into this zone that we just drew, and then short. So let's mark the target. If we push up into that zone, all right, to the bottom of the zone, we would have this leg right here. This would be a V wave. It would push right to there, and then we would be shooting for this level here, 5.199. All right, so that's what we would be looking for if the market pushes at that point. And right now, I don't do anything until the market gets there. All right, let's go to the last one, XRP, USD. Let's go to the weekly on this. 1 week, 50 years. So basically, support and resistance is looking good here that I'm getting ready to mark. This is the support level, and we're bounced on it already. This was the resistance level, and I could make it into an area, a zone. It would be where this blue level is, would be the basic area. The money flow, a little bit bullish. I would say it's bullish, and we also see this happening. And I haven't extended a lot of these, but descending triangle pattern. So we do have some levels where the market really could push up to, considering. All right, so let's go to the daily. 1 day, 50 years. And this is where we are. Not really any divergence here, actually. Well, there was some divergence from this point to here. And we see a move higher. So let's look at this. I think we short the market at this point. I would short this where it is at this level. If it fails to violate, to give us an entry, it could push back up into this zone. Here's our end waves still to the downside. That last wave. And we're in the next wave. All right, so where's the target at? Let's say we don't get any further. We're looking to short this market. We're looking for a target we would shoot for because we're 1, 2, and where we are. Whoa. Where we are, we will be shooting for 43,169.3. Okay. If it pushes up a little higher up into this zone, doesn't change much, about 44,8159. So I'm looking to short this market. I look to short it where it is based off of this rejection in this entry here. You're inside the TK zone, so you're between Tinkers and Kijinsen. Clouds flatten a little bit thick and angling over to a little bit. But we still could see some downside. Now here's the same thing. Thick cloud, angling to the upside, and then the market dropped. You can see how everything changed. All right, so we're still following structure. That's the main thing to me. Are we following structure? I want to be following that structure, and we are following structure. We're in an N wave to the downside. We're currently in a V wave and looking for the target to N wave. So until that structure is broken, you follow structure, follow the market where it's going. All right, so that's it. That's how we got it. It looks like we're good. If you guys want to check some of the other videos out, I have on the list. This is part of the playlist for the weekly sessions. So you could check the past other weeks out. There's a lot of stuff to learn, basically. And you could see how we're looking at where the market may go and so forth. But guys, please, if you like this, let me know. Give me a thumbs up. Give me a comment. If you need any questions answered, just let me know, and I'll try to answer it all for you. Appreciate you guys. Until next time, have a great one. God bless. So long.